Hello, this is Jordan, and this is your precious metals video market update. This is being recorded on the late morning of Thursday, February 25th, 2016. And starting off, let's look at a daily candle chart of gold. And when I pulled this at 1:26 p.m. Eastern Time, gold was trading at 1240. And this daily candle chart, we can see that yesterday there was a bit of a bearish reversal, but today gold's right back up. So gold over the last few weeks has basically been consolidating between 1200 and 1250. This consolidation looks bullish to me rather than bearish. More things would have to happen for gold to have some kind of a breakdown here. Even if it remains in the consolidation and doesn't break out, we should still give it the bullish benefit of the doubt. And you can just take the measured move of the consolidation from 1200 to 1250, project that forward. You get an upside target of about 1300, which in terms of the daily chart, that's where the high was in early 2015. Sometimes these types of consolidations, you'll get a huge projection forward because it's like a bull flag pattern. Now, I don't think this is a bull flag here where you can project it's going to go higher by like 100 or 200 points. Just don't see that. I mean, it's possible you could project this forward another. If you take the move from about 1195 to 1260, it's 65. So maybe we can get to 1320, 1325. There is a lot of resistance there, but I'm more confident that if gold breaks out, it's going to hit 1300. But keep those targets in mind of 1300 and 1325, because when we're looking at the monthly chart, my favorite gold chart, gold right now, again, trading at 1240. Gold looks like it's going to close the month above 1180 to 1200. I mean, we talked about how important that was 2 weeks ago in our last video, and we're big on the 20-month moving average, 40-day, 400-day moving average. Those are equivalent. But if you look at a monthly chart of gold, just look at a 40-month moving average. It's been even more significant. It's given fewer signals, but they've been very significant. I mean, gold went above it in 2001, 2002, even held above it during the financial crisis, as you can see, and then breaking below it there at the start of 2013. I mean, that was a major bearish signal. The 40-month moving average is now at 1284, and if we look at the monthly close of the high in January 2015, in the resistance in February, I think that is, I have a line there. It's right about at the same mark, 1281-ish. So there's a major confluence of resistance in terms of the monthly chart at 1284. I mean, that doesn't mean gold can't go to 1300 or a little bit higher, but that does tell us it's doubtful that gold's going to close above 1285 on a monthly basis. Now, that being said, who knows? Another target to keep in mind, which is even stronger resistance, is about 1325 to 1330. Remember, we mentioned it's possible that you can project the consolidation to about 1325-ish. So that's something to keep in mind. Again, strongest resistance here is at 1285. We're looking at a monthly chart. I mean, on the daily chart, that resistance is 1300, I believe, and then on the weekly chart it's 1294. So I don't want to get you too confused, but those are the upside targets we should look at: 1285, 1300, 1325-ish. So there, keep all those things in mind. And obviously support is at 1200 and 1180. Now, this chart is one new chart where I basically plot gold against all the foreign currency indices. We have gold against the US dollar basket, the trade weighted basket, and the emerging markets basket. And we can see that the trade weighted basket as well as the emerging markets basket, I mean, those are basically at 3-year highs or 2.8-year highs. I mean, they're very, very close to 3-year highs. I mean, we've seen key breakouts in those. Now, gold against the US dollar basket, the main one we look at, that hasn't quite broken out to a 3-year high yet. That was very high. It made a high peak there at the beginning of 2015. So looks like that's going to be retested in the short term. But again, gold against foreign currencies, I mean, it's it's very strong. It's to kind of put it on the same scale as gold. You'd basically say gold against foreign currencies is trading about $250 higher. So what does that come out to? Like 20% higher. So that's something to keep in mind. Gold continues to be really strong against foreign currencies. And another key will be when we see the dollar bottom and start to rally, whenever that happens, the key thing will be to check these charts and see if gold is in foreign currency terms, if gold is correcting lower or if it's holding its gains. That'll be a big tell going forward. But again, that's when the dollar has a rally and the dollar is still declining or in a consolidation right now. Now next, let's before we finish, take a look at the gold miners. They're selling off a little bit. I mean, I don't like to do these videos in the middle of the day, but I have to do it right now for other reasons. The miners are selling off a little bit today. We saw the same thing yesterday where they gapped up, they traded higher, and then they had a bearish reversal. But still, at the end of the day, the last hour or so, the miners recouped some of those losses. So weakness is really being bought. We see it again today where the miners are higher, but again, they've lost some of their gains. Still a couple hours left of trading. We don't know how it's going to finish, but this is a chart I've been following since last week, and if you just look at the various support points, I mean, gdxj has support at 24 and then around 23. I mean, gdxj could come down and test at 24 and we could still have the bias that it's going to hit 27 or 28. That's just the way it is. Same thing for GDX. I mean, that could come down and test 18. I mean, as long as it holds above 18, we're short-term bullish. And so there's just these markets have a lot of support, and they're nearing those resistance targets we talked about, which are about 28 GDXJ, 21, 22 GDX. So things could get a little more choppy. We're starting to see a little more selling on strength today and yesterday. But nevertheless, if you just look at the past 5 to 10 days, it's just all weakness is being bought. We're still seeing accumulation where, other than the last couple days, the miners are closing at the highs of the day. I mean, that's strength, that's accumulation. And lastly, let's take a look at just a weekly chart of GDX. And GDX, I don't know if it hit 20 today or if that was yesterday, but it's trading a little bit below that, but we can see, it's trading at 1985, very strong support at 1617. And if you take the consolidation from about 17 to 13, project that forward, you get an upside target of 21. And if you look at the chart, I mean, there's a little resistance at 20. Yes, gold has backed off. Very strong resistance at 22 and some resistance at 21. So 21, 22 is probably where I'm looking for a peak. Couple more things. Look at the volume. I mean, notice the huge volume that we see with GDX coming off that bottom. I mean, that's just massive. Before the volume peaks were during the sell-offs. So gold coming off its low, or GDX coming off its low, that was accompanied by huge volume. I mean, record volume at one point. And so that tells you there's been a major trend change. And secondly, just looking at the 80-week moving average, I mean, this chart is only a 3-year chart, but I mean, you guys know this. If you look at a 5, 6, 7-year chart, you can see the 80-week moving average does a fantastic job of showing you bulls and bears. We broke below it at the very start of 2013 or late 2012, and we've only tested it a couple times since the bear market began. The last time it was tested was really summer 2014. GDX almost tested it early 2015, but look what's happened in the past 3 weeks. So the GDX went above the moving average, then it retested it last week, held above it, and this week it's it opened around the moving average and right now is up 4.3% for the week. So I mean, that's just that's bullish action. That's a change in character because the 80-week moving average has been resistance. It's been the final resistance for the bear market going back several years, and now GDX is taking that out. So again, I just don't get it when there's people saying, "Oh, well, nothing's changed. It's still in a downtrend." I don't know what you're looking at because It's we see massive volume here, and it's taking out the last key resistance of the bear market. But just to conclude, I do think there's a little bit more upside here in the short term, and just again, if you have positions, continue to hold them because we're early in a what looks to be a new bull market here. A little bit more upside, but we'll see what happens. If these upside targets get hit, gold goes to 1300, 1325, maybe that's where we're going to get a correction or a long consolidation. If you haven't already, go to thedailygold.com/book and you'll get my book for free. There is a 2016 update. If you'd like to follow more of my work, go to thedailygold.com. If you have any comments or questions, feel free to send me an email, jordan@thedailygold.com. Thank you so much for listening and watching, everyone, and I wish you all the best in the weeks ahead, and I look forward to speaking with you again soon.